Hello everyone, welcome to 2025. I hope you have a fantastic year ahead of you. I think it's going to be an exciting year no matter what happens, or interesting at least. And although I'm not actually working today, I'm aware that the market's opening a little bit later on tonight and that natural gas had some interesting moves last week and probably some coming up this week too. I'm going to give you literally a 2-minute update while I've got a space outside here. Sorry about the audio if it's no good. It's windy outside. I'm sitting outside on the balcony with the barbecue area behind me. This is what the chart looks like. Big triangle breakout, as you can see in November, eventually breaking up through that long-term triangle and then moving up. You can see all my trade positions on here. I've called these out every single time on X and in my private group and some on YouTube as well. So we've taken quite a lot of long positions, a couple of short reversals, a bit of hedging down there. We went long at 3.31. We got the rollover gap down and then we bounced off the trend line again, carried on rallying all the way up to 4.2. My target here, and please have a look at the last video. We'll link that at the end of this one. It's really important that you watch that. My target's 4.4, perhaps even 4.8. That might sound outlandish to you, but I think all the conditions are set up. And when we quickly have a look at the COT report shortly, I'll show you what the institutional traders are thinking about this. So let's see where we are now. Big dramatic pullback last week, which was disconcerting for some. After touching 4.2, that big spike high candle got a lot of people spooked out. Well done to those of you who took profit. We actually took some profit at the top here, added some back on here at about 3.8. We've now dropped slightly below 3.8, but in the bigger picture, I think this is kind of okay. We've got this trend line underneath us, which is a really neat trend line. And look where we've pulled back into. Just the 50% retracement level right there, almost perfectly. A little bit of a bounce on Friday. Now, we've got the weekend gap coming up, or potential weekend gap. We've still got this very, very cold weather expected over quite large swathes of the US and perhaps even Europe too. And we've got the news from Gazprom about potentially cutting off supply. I think that might even be today. Who knows with what's going on with the Russians and Ukraine and the US and all the deals that are going on right now with the Trump administration and Europe and Ukraine and obviously Russia too. But now that we've pulled back down to the 50% retracement, showing a small bounce, we'll have a look at the shorter term charts shortly. There's every opportunity to repeat what we had last time, the pullback, the weekend gap up, a big dramatic gap up, and then the rally up further to 4.2. Could we see the same sort of thing later on tonight? In other words, a big weekend gap up, and then a continuation of this move up to my initial target at 4.4. A lot of people were saying 4.4 is unrealistic. I got a lot of flack on X and even some on YouTube about my targets. We almost got there actually, 4.2, I said 4.4. So 4.4 for me is still on the table, and perhaps even 4.8 as I said. Please look at the last video, and I will link this at the end. As I said before, it covers the reasons why I've set 4.4 and potentially 4.8 as targets. If we don't manage to gap up later on today as the weekend rolls over, and in fact we just gap down or dribble sideways, potential gap down could take us down to the 61.8% Fibonacci level, 3.45, always a key and critical level around about 3.5. It's also where the rising trend line is. And it's also where the 20-day moving average is. Notice that we've stayed well above the 20-day moving average, apart from a few little dribbles below. Occasionally, we're still well above it at the moment, and we have been above it largely for most of the time. So it's an important dynamic support, this 20-day moving average. And I guess when we roll over, that will have actually crept up to around about the 618 fib at 3.45. So I think that's a very, very key level. We may not even have to get there. If we gap up with any vigor like we had on the weekend rollover gap, I think I just called today a weekend. It's obviously not a weekend. It's New Year's Day. It's a holiday. Forgive me if I said something weird like that. I'll put a note at the beginning of the video if I did. But if we gap up today after the New Year's Day holiday, we could actually gap right up to 3.9 and open the week there and then carry on this move up to about 440. If we do get to 440, I'll consider hedging my entire or partially hedging my position and still looking for a potential probe up to 4.8. Once again, look at the last video for the reasons why. Let's go to the 4-hour chart very quickly and see what happened at the close of play before the New Year's Day holiday. You can see we pulled back down. There's the 20-period moving average on this 4-hour chart. There's the 50 and the 100 and the 200 still stacked in a bullish fashion. We've still got that ribbon or moving average rainbow, if you want to call it that, holding there only barely though. So are we going to gap up to, I don't know, 3.9, maybe even higher, or do we have to dribble down, or will we gap down to the 618 fib at 3.45 and potentially touch that trend line and bounce back up? Well, I don't know. As always, manage your risk properly. We got in at 3.31, so we're still in profit, obviously. I don't want to give too much of it back, obviously. It's been a good trade so far, but I actually do believe in this trade, and I think all the conditions are set up for this to continue to rally higher. Well, that's all on natural gas for now, folks. Just waiting for the markets to open up in a few hours' time. For those of you interested in stocks and Bitcoin, let me just remind you of my positions on NASDAQ and S&P. We got short from there at the top Bollinger Band and the extension level. We got out and reversed there. We then got out and shorted again over here at the Fibonacci retracement level, and we're still holding those shorts. We haven't adjusted that position at all. Same sort of thing on the S&P, although we didn't take that initial short. We got the long, exited the long, reversed to short, and we're still short on the S&P. As for the rest, they'll probably follow suit. And then going across to Bitcoin, well, you'll know my position on here. We dipped below that support level. As I said, please have a look at my posts on X. We dipped below there as I thought we might, bounced off there. I'm not convinced this is going to carry on without actually testing and probing a little bit lower. And if we do close beneath that red line, I might be forced to hedge some or all of my Bitcoin, perhaps pending a sudden dramatic quick spike down. Let's see how the day closes. If we close beneath this incredibly neat, probably too neat support level at 92,000, we might have to dip down to some of these lower levels, closer to 80,000. Watch for a very sharp and sudden spike down below, and don't get trapped by one of those famous bear traps that Bitcoin often performs. Wait for a daily close beneath this line. Don't rush into any shorts. We also went long on XRP, and we're still dabbling with Ethereum. And that's it for today, folks. I hope you enjoyed this, and if you are on your New Year's holiday and you haven't seen this, maybe you'll see it later on tonight or tomorrow. I'd really appreciate your subscription to this channel and your thumbs up. Please support the channel. It really helps us grow, and I'll see you in the next video. Take care.
Oi, bruv, the natty's on the prowl. Charts go wild, better rein it in now. Futures popping, spreads like fire. One wrong tick, and you're caught in the wire. Natural gas, the widow snare. Trade it light or she'll strip you bare. Weeds, buy the rumor, sell the facts. But in this game, there's no contract intact. Brent might whisper, but Natty screams. Got the algo spinning, chasing a scheme. Oi, gov, you clock in the double top. Or is that just another bull trap flop? I'm scalping like a geezer on Brick Lane, pounding the charts, keeping it sane. Up and down like a hackney bus. Natty's got no mercy, no trust.